last one where we spoke to Kate McCann just post the US election. I think 85% of people said their outlook was positive given the current circumstances, and that's a huge number, and that includes obviously CEOs, CFOs. 61% of attendees said that revenue growth is their highest priority into next year, into 2021. How they do that, of course, is going to be around pivoting businesses, thinking about things differently, thinking about their proposition, and that in turn will drive the market. And 73% of people said that they will see their organisation go through workplace transformation in the next 6 months. A huge part of that being culture and technology led. And then the other element of this, beyond the fact that we see the M&A market, the pent up demand around this, Eton Bridge Partners work a lot with private equity, and there's definitely a school of thought across the mid-market that has said the pent up demand is there, and that will be released through Q1, and that of course will feed into the market. But I think, you know, the flip side of that is if you look at LTIPs across the board, a lot are underwater. That will mean that people will move on. I think that in itself will keep the churn going around executive search, and that of course feeds in to the interim space. So all in one there, and I'm sure we can deep dive into some of those subjects a little later, but that hopefully is a bit of a snapshot from our side anyway, and look forward to answering any further questions in a moment with you.
Great, thanks Steve. Darren, can you follow on please?
Yeah, happily, Bruce. Thank you. I mean, Steve, a lot of what you said there resonates just in terms of the Practicus story. We started in 2004. I joined in 2006, became CEO in 2014, and we're very much about helping people navigate change. So in the spirit of trying to drive confidence into the market, that's been the key story for us of 2020 in terms of there was a complete lack of confidence coming out of the COVID announcement, end of Q1 into Q2. We were doing the analysis, and the thing that actually really helped the Practicus business from an IIM point of view was actually the record levels of retention. So we found that what happened was in this moment of crisis and in the real kind of unknown, uncharted waters, we found that we had a lot of people that were already known to our clients, were trusted by our clients. They wanted to keep them around to make sure that everyone really knuckled down and got on with projects and adapted to working remotely and kept up what I call visible value, and just kept those relationships really strongly formed. So that really was a key trend for us through that first lockdown. Thankfully, we roll on to what became lockdown 2.0, and it was completely different. I mean, I'll echo what Steve said around it wasn't an absolute barnstormer of a sort of finale to 2020, but compared to where we were, we definitely saw a lot more opportunity, and we've seen thankfully more programs being launched with not quite normal scale, but certainly with enough scale for it to be multiple teams rather than individuals. And that's what we're hoping, of course, we can all try and fuel into the next 12 months and make sure that people accept you can't just sit on your hands. We've got to make decisions. We've got to drive that out into the market and be nimble, be agile, but also be opportunistic and get the people with those mindsets of, right, you know what, we're going to have to embrace this. Hopefully the vaccine news will be good, but manage to keep moving things forward. And again, Steve, I definitely echo what you said around, if you think about the economics of all of this, the drop in economic performance was totally man-made. It's the first time in history that actually we battened down the hatches for the sort of the human livelihood purposes. It wasn't because there's a lack of liquidity in the market, there wasn't a lack of investment. That's still there, definitely pent up. And I think the opportunities that come off the back of that will need to be accelerated performance from wherever investment portfolios are being placed to then drive that through. And that's where I think the interim market will play a significant role in terms of landing and engaging and mobilizing quickly, performing quickly to try and recover what, bear in mind, most private equity funds, they have a 5-year cycle. They've lost a good 9 months of that cycle, but they don't want to delay it beyond because the money is there. I know it's a bit of a whistle-stop tour, but does that give you a fair flavour, or do you want me to talk about IR35 as well now?
Well, let's hand over to Doug for some introductory remarks from Doug, and then we'll swing back, I'm sure, on IR35. Okay. Doug? Let me take you off mute, Doug. There you go.
Thanks, Bruce. Apologies for dropping out earlier. I've been using broadband here for the last year without any difficulty. Always good when it drops out at the pivotal moment. But glad to be back. I didn't catch all of it, I'm afraid to say, but I did hopefully get a good flavour from what Steve was saying, what Darren was saying as well. You know, I'd really agree with their sentiments. We're really optimistic about 2021 for lots of good reasons. I think when we were beginning this year and we really didn't understand what a pandemic would mean to our business, we were naively incredibly positive and optimistic about 2020. And when we were in February and March, we were very excited about what the year was going to look like because it was shaping up to be so good. I think back at the I'd echo a point that Darren made. You know, back in April, May, we were really surprised by how supportive a lot of our clients were to move their interims online. We did think a lot of them would be just cancelled and we would be in a position where revenue was seen to be plummeting. But there was a number of factors came into play, and you know, we were, like everybody else, amazed at how easily people moved online and carried on working. There were some clients that just decided to call it and to park their projects, but a lot of them, particularly people in leadership roles, they were happy to carry on and to make it work. I think we as well got to you know, through the summer period and began to see some really positive signs across a number of sectors. We're lucky. We've got a good spread across the private and public sector. We saw the public sector hire aggressively throughout the year, and we were really pleased with that. But in the private sector, we definitely saw some really good things happening in the autumn, and that's given us confidence for 2021. I read a great stat in the Times this morning. I think it was the Times that said a third of businesses have outperformed their position in 2019, which is great. You know, I was quite surprised by that. I thought, you know, I'd like to see the detail behind that poll, but if it's correct, then a lot of businesses have done well and they've navigated this effectively. And I think that's given them, you know, a good platform to be able to grow. And again, if I look at when we talk to our private equity clients, again, you know, exactly the same comments that Steve was making. A lot of them have got, you know, real appetite to do deals. And their confidence is high because they think there's going to be a bit of reality when it comes to pricing and getting them away, particularly the distressed stuff where there's been a little bit of denial. But so how would I see 2021? Well, I think I'd be positive overall, despite Brexit and IR35. I think it's certainly going to be better than this year. But I think there's some really good signs of positivity, and I'd say they're definitely going to be in the SME to medium-sized businesses that I think are going to be more agile and will navigate IR35, Brexit, those types of challenges, and will be a bit more agile in terms of bouncing back. I think where the challenge will be for some of us will be in the corporate clients, particularly if they're, you know, again, I do agree with you, Darren. You know, the corporate clients are back to thinking about some of the big changes they need to make, particularly around digital. But if I look at sectors that we operate in, like financial services, we do see continued challenges into next year. Our business has made quite a bit of money in helping challenger banks over the last few years with helping them with new licensing and the like and getting away. And I do think there's going to be digital and target operating model changes within retail banking. But when we talk to our retail banking clients, this probably does sound a little bit onerous, and I don't want to sort of put a dampener on all the positivity, but when we talk to them, they're really battening down the hatches for next year. So why is that? They think there's going to be a lot of defaults on cards, loans, mortgages when people come out of the fully out of furlough. So they're expecting that. So they're pricing it in and considering what does that mean to them. Well, it means they're cutting back on a lot of projects that they would have been wanted to do because they're expecting to have some headwinds. And we know if the banking community struggles, it's not great for the rest of the economy. So I think that's the only thing of caution I would say is that, you know, other areas of financial services still doing really well. Insurance, and we see that that's a market that's going to continue to be strong. Other areas I think are going to bounce back pretty aggressively, like retail. We all like spending, and I think a lot of us still like being in shops. So I think there's a huge amount of positivity, but I think there's that cautionary element of the banking community are giving us a little bit more of a much more negative message about what they see happening for them in 2021.
Thanks, Doug. So look, before we go over to questions, and we're going to take the first question from Nigel Dowler. I'll just turn over to Tony Evans with some opening remarks on behalf of the Institute. Tony.
Thanks very much, Bruce. Yes, as Bruce mentioned earlier, for those who don't know me, I'm the co-chair of the Institute of Interim Management. We've been around since 2001 as an institute. We continue to grow and develop the offering for the individual interim. And just to make the point, we are interims ourselves. All the people on the board are interims, practicing interims. I include myself in that. I operate as an interim CEO, for example, and I usually get involved with things that are fairly complicated and requiring forms of transformational change. There should be plenty of work around, I suspect, in the coming year. So from the Institute's perspective, I think it would simply reinforce what's been said by Darren and Doug and Steve. We can see what's happening in the marketplace reasonably well and consistently with what's been said. Into 2021, I think definitely it's reasonable to be more positive than we've seen after Q1 in 2020. My personal sense is it might take the whole thing to rev up a bit through the first quarter or so in 2021, because as we sit here, we still really don't have a clue what will happen with Brexit, or indeed if they even bother to stop discussing when they get to December the 31st. I had a brief conversation with Doug yesterday about this, as to whether or not we might see the deadlines extended yet again. The essence of IR35 is going to take effect into the private sector. Where that goes, I'll be interested to hear from the provider's point of view, how they're seeing things with the clients as you're moving towards the April deadline. I think that would be an interesting conversation. But I'm getting a sense that people now are, if not resigned to it, certainly starting to try and get to terms with how it should work effectively, because it isn't going away. Treasury and HMRC have spent 20 years on a mission. They're not going to change now. So I think those would be my opening comments, Bruce.
Okay, thanks for that, Tony. So we have the results of the poll, the first poll that we did. Thank you to the 77% of you who completed that. I think there were 5 questions. Question number 1, are you currently on assignment? 30% are, 70% aren't. Do you expect to be on assignment in 2021? Well, echoing the positivity expressed by the panel, 95% of you said that you expect to be on assignment in 2021. 5 will still be not on assignment, either putting your feet up or doing something else. Will the market for interims improve? 78% said it would. 22% said it would deteriorate, which is an interesting kind of contrast to the earlier question of the 95 and 5. What will be the most important factor driving the outlook? 65% said that it would be the COVID vaccine rollout. 14% said Brexit, 22% IR35. No impact envisaged from Biden coming in and Trump going out. And 100% of the attendees today are working in the private sector. So with those interesting survey feedback, thank you very much for that. We'll hand over to Nigel, who I think, Nigel, the floor is yours to ask the first question of the panel.
Thank you very much. Good to meet everybody. Great introductions. Thank you all. I've done quite a bit of work with the CBI this year in terms of working with SMEs and mid-size, so I echo Doug's comments. The smaller companies really need the help. I guess the concern is around their proposition and the new markets. I think they're very cautious. I don't think they're as grown up. So I think we've always got a weird scenario in the interim market. I've been an interim commercial and sales leader for the last in change and transformation and digitization for 20 years. And having gone through the dot-com bubble and all those sort of crazy things, 9/11, this is the kind of corporates maybe don't kind of have the appetite, and the SMEs don't quite understand interim. I think as an industry, we're going to have to go and educate and reach out to the smaller companies who have got the greatest potential to actually improve and make significant growth from what we can deliver. And I guess the classic thing for me is as a sales commercial director kind of guy, those kind of assignments aren't that frequent. I don't know what we're going to actually do to generate these new assignments. So what do any of the panelists think about kind of growing commercial leadership roles?
So who wants to come in on that? Shall we start with you, Steve?
Yeah, we can do. Yeah, I mean, I think it's a challenge for the smaller organisations. I think I sort of recall speaking about this earlier last year, actually, where we were looking at the rise of the portfolio career, and I think there's a lot to be said actually for portfolio careers now, and certainly that is something more and more people are doing, and there are many boards out there that are very cognizant and certainly very good at running a business as it is at the moment, but they haven't got those skills necessarily going into the next phase. And I think that is something we will see, Nigel. We'll see people, like your good self, able to inject that level of commercial outlook or the ability to think more entrepreneurially. Definitely one, not after the mulled wine, that one, but more about the business and be able to engage with the board to help them shape and drive that business going forward. So I wonder if perhaps that's a trend that we will see as a consequence of that. Not sure if Darren and Doug could build upon that.
Well, let's go to Darren, shall we?
I mean, for me, I think that link comes back to what we talked about in terms of the private equity investment and getting something that can be quite a defined business plan to accelerate growth and know that people are coming in. I suppose you look at these things in phases in terms of launching something, getting through that phase, and then handing it over to a BAU type of prospects, and keep pushing that type of agenda and that positioning. The one slight concern I have about that, and the way I've seen some of the certainly public sector roles have gone, where you've had some senior leadership roles, the decision's been taken that actually instead of it being what would have been a historical, we go in as a phase one build, hand over, there's been a phase one build and then stay. And we've seen a lot more transfers of people actually saying, well, you know what, actually, I'd rather complete that first project, and understandably then I will move across, as opposed to do the traditional exit and hand over to someone else. And I think that's where it's going to potentially merge a wee bit, depending on people's personal circumstances.
Doug?
Hi, Nigel. Nigel, do you mind if I split the idea of sales and commercial roles into two camps?
Yeah, good idea.
I think sales roles are always tough to find for interim managers, and I think they are interim directors, because most companies, they really want to own their own relationships, and there's a slight nervousness about bringing somebody in and will they be front and centre. Of course, but the reality is we know that sales leadership is far more about that than client contact. I think for people with that type of skill set, I think the thing that's going to really assist them in 2021 is understanding their proposition. And I think sales leadership, they're going to have to think now around what it is they do. And for lots of companies, I think they're going to want assistance with selling through digital channels. And so, what we might perceive as sales leadership, key account management, all that sort of stuff. I think that will continue within a business, but all of them will want to, because of the pandemic, understand how they can communicate digitally. And of course, there's lots of companies out there, whether they're in consumer or even in B2B, that will have what we would expect. They'll be using Facebook or LinkedIn or whatever it is, or traditional channels like PR, advertising. However, I think that it's the digital stuff that they really, really want to own, because it's such a challenge to get right. So I think for me, it's understanding what that digital channel or funnel looks like, how you create digital engagement.
Yeah, I agree. The process, I mean, I've worked on 4 assignments over 8 years with you guys at Interim Partners, and really every time it's about the process. I've been in some difficult situations and the spin outs from universities where there's no revenue, or it's very much down on its target, or there's an M&A and they can't really show the sort of buyers what the real reality is, and it all comes back to process. And there's this sort of thing that salespeople have, this aura of it's kind of about me and my little black book and how I get on with people. It's actually a lot more about process, and the real thing is that customers buy through a buying process. And the biggest thing that the people who sort of are placing the assignments don't understand is that if your process isn't there and isn't working to a structure, to a logic, then it's never going to work. And whoever comes in with however many, suits and smart boots, it is that process, and so that's how it tends to work better. So it'd be interesting to see, really. But
yeah, it's using digital engagement tools, Pardot, Marketo, those types of things.
And you're right. The digitization then makes it far more efficient than ultimately effective, really. Exactly.
It's going to be how you direct your sales team using those digital opportunities. So I think that's really going to be important, having that understanding of how you can embrace digital. I think on the commercial side, I do think there is going to be a good marketplace for that regardless. So if you're an interim CEO or you're interim commercial director, I do think that lots of SMEs already see the value of that, and they're going to want the opportunities. And so if I was somebody in that with that skill set, I would be targeting businesses that are working across Europe and really nervous and anxious about what Brexit might mean and how they might need to re-engage or navigate that. So, of course, you can actually be talking to, as well, UK-centric businesses that think that it's not going to hurt them. But I think there's going to be a real niche for assisting businesses that may export 5, 10, 20% and be really nervous about this, or nervous that their supply chains are disrupted, or indeed that their customers are going to turn away from them and try and source whatever they're getting from their counterparts in France, Germany, or wherever. So I think that if you're sales or commercially driven, it's going to be how do we embrace this new world of work where we're outside of the European Union, and that would be my proposition. Yeah.
It's very often a timing thing, isn't it, really? As much as we'd all like to be busier a lot of 3 or 6 months ago, it has to be the client's time and their requirement to make it happen. And I agree with what you've all said. It's coming in the coming months, so things do look optimistic.
Okay, so look, next question in from Tony Barker. Tony, you should be able to ask that question now, hopefully.
Yeah, thanks, Bruce. So actually, my question leads on quite nicely from Nigel's. I was interested in the panel's view around whether they're seeing or expect to see changes in the types of clients that are engaging interims into 21, either by sector or maybe more interestingly by type of business, so PLC, privately owned, private equity, etc. Or actually, just building on Nigel's comment, maybe a third dimension, which is actually by functional type. So it's interesting in Doug's comments about sort of sales, commercial, marketing, digital. Because one of the things I was just I'm doing some work with Tony and the board around survey, and one of the things I find interesting, if you look back at the 2020 survey of interim managers, only 5% actually say they are in sales or marketing. And so I'm interested in terms of, given what you say, Doug, about the proposition, usually it's used like maybe the marketing function that would help organisation define that proposition sort of thing. Again, interested in the panel views. Do you think there's going to be a change maybe in the types of functional expertise that clients are going to be looking for going forward?
Okay, so let's go to Doug on that one, shall we?
Well, yeah, I would agree. I think there is going to be some slight changes in functional expertise. And so, I think more, as I mentioned a minute ago, more marketing with sales as opposed to sales and marketing, and certainly the digital proposition, as I just mentioned. But, I just remember, as we all do, what happened in 2008, 2009, when there was a bit of a shock to the economy. And, that might be a good place to briefly revisit. Interestingly enough, we decided to get out of the SME marketplace as a business then. We weren't really doing much in the SME market, and we focused solely on corporates from 2010 onwards, and that served us really well because we were worried about bad debt, we were worried about business failures. Do you know what? I'm not sure if I would actually follow that strategy now. I probably would have a differing strategy, and I think we would want to engage more with the SME community because we do see a real appetite there, and I think we've now got the tools to be able to reach out to them in a way that we probably didn't in the past. In terms of sectors, I do think that some sectors are going to win and some sectors are going to lose, and that might be an obvious thing to say, but we will of course see a bounce back in retail and most definitely in hospitality. But I think there's some sectors as well that will, as I mentioned to you earlier, are going to find this tough. And retail banking are telling us that they're expecting it to be tough. They're telling us that defaults are going to be much higher, and so we know that consumer spending as a result will probably fall at some point as the dust settles in the summer or autumn. So there is going to be all of these legacy challenges. And so if we go back to 2008, 2009, that whole period, who remembers conversations about the deficit, the amount of borrowing, and then listening to BBC News and somebody saying it's going to take 10 years to pay this back. The economy is going to be struggling for a 10-year period. I couldn't get my head around that, that it was going to take that. But here we are 10 years later. Well, the government spending is being profoundly high. I just can't see how we in the business community escape that. And it's probably going to be through higher taxation, but it will ultimately be some cuts. We certainly won't have austerity. I don't think that's politically achievable, but there will definitely be cuts in spending or perceived cuts in spending over the next few years, probably dependent on when an electoral cycle is. So, you can't borrow and lose all this amount of money without it having a real impact. So, I think that's going to be painful for the corporate community, and it's going to take a while for them to weather that storm. They may not be as agile as they'd like to be, and so yeah, you're absolutely right. There's going to be you want to look at this sector by sector and discipline by discipline. And I don't know if I could throw this to the rest of the panel, but I'm sure there was assignments that were really popular pre-08 that sort of disappeared by 2010, and we may want to go back and think, what were the changes of behaviour with our clients then, when they're a little bit bit shorter of money, and remind ourselves.
Darren, do you want to pick that up?
Yeah, I think in terms of the SME point, I think that's a good one. It should definitely be a segment in terms of a client portfolio that is explored and engaged with, and actually the kind of management of that and the way the process and the introduction should be made is probably more to do with educating them around the commercial investment and what the return is compared to what they would have potentially thought. And I mean, if I think over the years, SMEs and the number of them that we've worked with that have then grown and outgrown themselves in a way, that's become a good market to be in. Those that have got the growing pains and need the additional expertise from potentially those that have worked in the bigger corporates already, but are able to adjust and adapt and manage their style and communication. I think from an Interim's point of view, being able to go in somewhere and talk in that way that comes across as informative and isn't condescending or isn't this sort of, oh, well, yeah, we'll help you out, that it's a very important dynamic to get right, that you can build a strong relationship. But then I'd also be driving the commercials of that, so that people are prepared to perhaps work part-time and protect day rates rather than think there's going to be full-time roles available in that segment. Because I just feel that you could very easily overload someone who's running an SME and they've got everything to think about. And I know from my own personal point of view, having that time to reflect on a 2 or 3 day week of access and of input from somebody, then go away and come back and look at it differently is quite valuable. Doug, your point around the role changes, I think that's something that it's hard to call at this stage, because what we've seen is that what people see as important post a challenging time can vary massively depending on the size, the sector, the maturity of the organisation. And for me, I think it's been able to get access to those that, back to what I said at the beginning, around who's got the mindset to still do things and invest and to move forward and take advantage of the market. And as we've all appreciated through the various webinars and just our interactions this year, COVID has been an accelerator for a lot of things that are actually a positive. So in the spirit of balance, this whole dynamic, then that remote working, that access to different talent pools, the fact that geography doesn't play such a significant factor, that if you were to weave IR35 into it, the fact that people are not going to face the same kind of expenses that they were likely to face makes the roles potentially that are inside are not quite as unpalatable as they otherwise would have been. And you take all of that in the round, and actually, what are the things out of COVID that have been positive for the industry and indeed positive for the interim community to embrace and demonstrate to people how their value and the adjustments can be made.
Okay, so look, I think before we go on to Steve, I think we'll just pick up with Mark Goblaw, who I've now, if I'm saying that properly, Mark, apologies if I'm not, who is going to come in with his question. Steve, just to forewarn you, the 4 characters of the question will include IR35.
That's not a problem. Could I, Bruce, just make one additional point, because I don't want to layer on Darren or Doug on the previous, but I think it's an important point that just from a functional expertise perspective, we've seen in times of austerity before, it's about bottom line savings, and I do think that we'll see procurement, supply chain efficiency gains. That will absolutely be a hotter area, and I do agree with the point around the kind of SME. Especially driven by the M&A space, where the capital gains tax changes, and I think that in part will then move on and give us even more from that side of things. So just wanted to add to that. Thank you.
Yeah, thanks, Steve. And I suppose from my point of view, one always thinks that finance professionals and HR people in these times have got skills that are always going to be called upon. But that's so. Mark, over to you to ask the next question.
Hi there, thanks. Yeah, the last name is Goblow. It's French. It's easy enough. I'm new to this. My background has really been in digital leadership, in terms of digital work and also consulting. So I'm kind of curious about whether this marketplace and industry is going to move more from role-based to service-based type of work, and whether that would enable us to work more with multiple clients or part-time, as mentioned, because or whether it be a blend, because I would have thought, certainly in terms of the dreaded 4 letters, IR35, it would be easier to stay outside if this was a bit more of a service-led approach. So I was just trying to find out whether there are any trends towards using interims to provide services, and also ultimately across clients, as opposed to more traditionally, you provide a role and it's one client at a time. But particularly with the change of digital coming into play.
Thanks, Mark. Steve, do you want to pick up on that?
Absolutely. Yeah, I think it goes back to the sort of the rise of the portfolio career, actually, because I do think there's something to be said there for. It's going to drive the activity around interims having multiple clients. I mean, I'm personally, I wouldn't say I'm a fan of IR35. Crikey, I'll be kicked out of this group. But I do think there's an element that's going to professionalise the interim careers. I do. I think it's just as important to say what an interim is there to do or not to do as it is to say what they're there to do. And I think this role definition piece around, you're very clearly within a business to deliver X, Y, or Z, and then that is the assignment. I lean towards that as a sort of as that being kind of best in class, really, in terms of interim and what we'll see. I think the point you make, Mark, around the kind of statement of work element, and will we see it move much more towards that, and or a schedule of deliverables? I think there will. I think there'll be a bit of a hybrid model that appears in between that. I think there'll be sort of full-blown consultancy, and then I think you'll see the alternative consultancy model, which is already being delivered by many. And I do think, like I say, that there'll just be much more onus put on the outset on why are you bringing in this professional to deliver within the business. And I think that's a good question to ask someone within an organization, because they should be able to easily articulate that, and as should the interim. So yeah, I think it's not going to be without its challenges, that's for sure, because there are a number of organizations that aren't necessarily looking at individual determinations in the way that they should do, but that's an education piece, and I think we can get there.
Darren, do you want to come in on that?
I think Steve's flagged it strongly there. I mean, the sense I get is to answer a specific question from the chat is around, yes, we are seeing more people taking on a portfolio of assignments and running them concurrently, and that's definitely a trend. I think in terms of the way clients are engaging and buying, I mean, Steve's quite right that the rigor around sign-off. So in the spirit of what we're talking about here in terms of people investing, there's still going to be a lot more scrutiny. I have a term called decision by committee, which is basically where people aren't prepared to own something by themselves. They do want their colleague from a different department, or their superior, their subordinate, whoever, just to let's all collectively get together and agree this is the right approach. That in itself will drive more scrutiny. So there needs to be strong business cases for investment. Then there needs to be strong rigor and assessment of the performance. And I think that lends itself to those senior seasoned interims who are very capable to adjust to much more SOW-led assignments, perhaps, than maybe the industry had in the past, as opposed to the timesheet type of professional day work. But and I think most interims would welcome that. So yeah, provide the rigor, provide the value back, and then there's a good retention model there, and certainly it helps build the business case for the next assignment and for ongoing work.
Yeah.
And Doug?
We're quietly excited about some of the opportunities that IR35 will provide us, and I think it's clarity is the first. Clarity of what we should be doing and how we should be doing it. Years ago, when we in Interim Partners, we set up a tool and we put it behind our website, and we started measuring objectives and milestones, and we wanted to move to this sort of hybrid of consulting or SOW about 4 or 5 years ago, I think it was. It was really difficult to get away, and I think we managed to get about 20% of our interims onto the system and to do it. So why was it difficult? I think we didn't have the clarity that we needed. And so now for me, one of the key questions we ask our clients at the outset, even as we're engaging, is what is the delivery, what's the differing engagement models that they're going to want to use? And I think when you understand what that engagement model should be, then you have a really good understanding of how you can support them. So if you've gone and you've engaged with the client from a consulting point of view, and you've positioned yourself in that way, and you can show those types of credentials, then I think they're quite happy to deal with you through SOW, and to make sure you've got that type of framework. I think if you go to them with a range of opportunities in terms of how you would engage them, you've got to be really clear about what the contractual benefits and purposes are. And I don't think you can have a contract that's sort of one size fits all, or a jack of all trades model that says, yeah, we'll do SOW, or we'll do a bit of this, or a bit of timesheets. I think it's just not going to wash, particularly with the larger customers. So it's having that real clarity around what's the engagement model and how you're going to deliver it. So there will be a polarizing, really, of that sort of statement of work opportunity that should really be done through paid on delivery, on outcome, not at all on day rate. And of course there will be a polarizing on the other side of the fence of people that are in limited company umbrellas, and we'll just have to accept that the market will adjust to the pricing and the costs associated with that. So for me, it's probably a little long overdue. It will professionalize the interim marketplace. It will provide clarity, and it will mean that we'll all have to work to stricter engagement models, but that will be a good thing for all around, I think.
So encouraging comments there from the panel. We got a question here from Carl, so let me find Carl and take Carl. I've got you here, Carl. Let me just unmute you if you want to ask the question. So Carl Rego.
Hi, everyone. I know some of you, and hello to those I don't know. I just wanted to ask a question about what the panel are seeing when it comes to the rates for various interim roles. And I just want to pick up on the prior conversation as well. I've seen over the recent years this convergence or apparent convergence between interim work and consulting work, and even you've also got the lines blur between interim and full-time. Some interim roles can be 6-12 months, some 6-12 months, maybe sometimes a little beyond. Some full-time roles, life cycle of a role can sometimes be 18 months. So there's like sometimes it's 6 of one, half dozen of another in terms of the work that has to be done. The way it's engaged in contract can be different, but that's neither here nor there. My question is around what the panel are seeing in terms of the sorts of rates that interims are able to, that the market will handle now, and for what sorts of roles do they see interims having the most pricing power?
Okay, so let's go to Darren on that one first of all.
Okay, so I think the issue with rates is particularly stark around, I suppose it's the range, and that you can have some clients think the rate value is X and another client thinks it's Y, and if I'm really honest with you all, it's sometimes hard to understand exactly why. So this kind of range of numbers for the similar roles, depending on the organisation or indeed the sector, can be quite difficult to appreciate. And then it comes back to some of the more niche, high demand roles. We talked a lot about digital. I would say the senior technologist roles, they're very much in high demand, and the rates are holding up. I'd also say that one of the things we found in the last 6 months would be that where rates have been challenged is actually to do what I've already mentioned around let's take the overall budget for a piece of work over a period of time, and let's invest in that for a shorter number of days and keep the rates where they should be. And I think what happens then is that clients get the benefit that their budget is managed, but also interims retain the day rate that they're targeting. Plus, of course, there's that balance back into 3-4 day week at a reasonable rate. It's better than salami slicing a budget across 5 days and feeling devalued.
Yeah. Steve, thoughts on rates?
Yeah, I'd agree with Darren. It does flex hugely. I think there's it depends on what buyer of services you're talking to. I think generally, if I look at kind of finance and CFOs, they tend to look at the supply and demand of the marketplace and immediately assume that there are more people out there, so therefore day rates are less. When obviously you sort of come back to the cost versus value discussion, and it's so that does become a little bit of a challenge, I think, and it's perception of the market rather than reality that we're often battling against. I think things like, just to use that procurement example again, I think where there are typical situations where you can easily point towards the ROI, so you can say, if you're going to save X amount of million versus the day rate, again, that becomes a pretty compelling case, which is fine. I think that's more difficult across other roles, really. So I think, like anything, it's probably a bit of a woolly answer, I'm afraid, Carl, in terms of not telling you kind of exactly the key areas that we're going to see spike and those that are going to go down. But I just think it'll be a variation, and I think, to Darren's point, quite rightly so, that technology and digital will continue to hold its value.
Yeah. Doug, have you got anything to add to that?
Yeah, well, it goes back to my earlier points, actually. I do think differing engagement models are important, and I think it's the conversion, the conflation of all of these types of roles that is the challenge. If you're going to introduce risk or value, through a consulting framework, you're going to expect to get much higher rates of pay. If you're going to be wanting to see the benefits of largely, being an employee, you're going to see something completely different. So I think the how you engage with the client will be significant in terms of the type of rate you get, and that will really be down to those key factors of value and risk.
Okay, so
could I just add something to that then, Bruce?
Go on then, Tony. Yeah, I was going to bring you in.
Yeah, thank you. I would want to, from the interim's perspective, reinforce the point about quality. So the two elements that I think an interim needs to be trading on is the quality of performance, what they can deliver, and therefore their return on investment. Now, for some some roles, it's easier than others to make it very quantitative. But even in the roles where there's a significant element of the qualitative, it can still be structured so that you can make the point that you're going to get a great deal of added value to the client organization for the time put in by a top quality interim. I think that's the important thing in order to sustain a sensible day rate and develop it. The other point about doing the fractional thing is also relevant, I think. I take Darren's point about it's better to try and keep your day rate if it means going to 3 or 4 days rather than full 5 days where it's smeared out, and it focuses everybody in on what you're doing as soon as you go to less than 5 days anyway. So I think that's a good way to think about it as the interim.
Thanks, Tony. Also, I just wanted to do the commercial break that for those of you who are members of the IIM, thank you very much for your ongoing support. As Tony said, it's an organization run by interims for interims. All the directors are serving pro bono and giving up their time freely to support the Institute. For those of you who aren't members, I would encourage you to join, and details on the website can be found. And those of you that want to get involved in helping the Institute, please, Tony, I'm sure, would be delighted to hear from you. So we've got time for a round robin on some of the final questions. So Tony Barker is asking, are the panel seeing more new interims coming into the market? So let's ask Steve, are you seeing more new interims coming into the market, Steve?
There's more available people to an extent. I wouldn't necessarily say they are, fixed on. They're not career interims by my definition necessarily, because they're saying, look, I'm open to both. And I think there might be that element of, I will do something on a bit part basis, but there's always that element of, if a permanent role comes along, then that's fine too, which I do distinguish quite differently from a career interim that have very clearly said, this is my career, this is what I do. So I think the volume is higher, Tony. But for actual career interims like your good self, I wouldn't worry, because you've got people that are marketing you in the right way and the value that you can bring. So
Russell Shackleton is asking, he's interested to hear the thoughts of the panel on sustainability, as larger organizations are now including sustainability plans in their reporting. Do you see this as much of a growth area? Darren, do you want to take that one?
I think it's one of those areas that is definitely going to be on more boardroom agendas moving into next year and beyond. And just you think about all the government mandates around how we need to improve things from an environmental point of view. So we've got this issue right now, getting through COVID, getting the vaccine. I think certain things around sustainability will come back relatively quickly off the back of that. Yeah, I think there's an awful lot of C-suite immersion right now in what's our trading plan to navigate COVID still, and off the back of that will come more of the strategic longer play areas to consider.
Thanks. And there's a question from Greg. Back to our old friend IR35, how come most people don't seem to understand the partnership model, LLP, which if structured correctly, avoids the client's IR35 assessment? Now, I have to say, I don't really, I mean, this is not an area I'm familiar with. Doug, can you comment on that, the partnership model in the context of IR35?
I'm not sure I can, if I'm honest. I'd love to be able to. I'm not sure what the implications of that are.
I think, Greg, if you don't mind, we're planning a webinar early in the new year on IR35, so hold that thought, and we'll come back on that if we may. Although I see you there. I'll open you up. Was there anything that you particularly wanted to add around that?
Hi, thanks. No, I mean, it's just an offering that my accountant happens to provide, which is forming partnerships of what used to be contractors, putting them together under an LLP model, and the tax rules are completely different there. So even if there is an inside R35 determination by the client, it turns out it's irrelevant. If you do get charged income tax, you can just write to the HMRC and reclaim it. But there are very specific rules about how that partnership model needs to work. My confusion here is, it seems such an easy way around the R35 issue. I won't bore you with the details about what you need, how you need to organise this LLP, but it seems so remarkably straightforward. It does have costs attached, but whatever. My confusion is how absolutely nobody seems to know about this. My accountant's got 200 people working under LLP models now, and totally avoiding the I-35 assessment process. But most people just are unaware of this. I mean, I can provide tax details.
It'd certainly be interesting to find out a bit more about that, and whether or not the revenue are aware of that, and whether they may see that as legitimate or otherwise.
Very. My accountant has often confirmed structures with HMRC and got confirmation back. The law is very, very clear on it. I mean, I can provide details if you want before that next session in January. Then yeah, I can provide details if that helps inform a discussion on it.
Greg, would you like to just drop me a line after the meeting?
Yeah, sure.
Okay, so look, we're just coming, in fact, we've overran slightly, but thanks everyone for your participation. I'm just going to turn the floor over to Tony, not to sing the Christmas carol, but
we clear the meeting quickly.
maybe we could have we could join hands and sing "O Come All Ye Faithful." But if you'd like to just give closing remarks, Tony, and
sure,
okay. And we'll wind up. Thanks.
Well, the first thing to do, of course, is to say a big thank you to Steve, Darren, and Doug for taking some time out this morning in order to be able to talk to us and give us the benefit of their views looking forward into 2021. I appreciate that very much indeed. So thank you very much indeed, gentlemen. Much appreciated.
You're welcome.
Could I also say thank you very much to everybody who's taken the time and trouble to attend the meeting today. I hope you found it useful. I hope you've taken on board, those of you who are not members, that it's essential you become a member of the Institute. It should be top of your priority list for 2021. And go and have a look at the website and see the benefits there. We'll continue with our webinar series in the new year. We're busy trying to just put the final touches to it now. There was a comment earlier about, are more people entering the profession now as a result of the upheavals we've been having? Our view is that there are quite a lot more people looking at that. So one of the things we will do is run a sort of an introduction to the interim profession webinar about once a quarter during next year, just to enable people to have a flavour of what they might be actually committing to and what it really means, so that they can start the road of making an informed decision on a career transition if they wish to do so. So I think that's, Bruce, about it from us. Thank you again, everybody. It's been a really good session. I've enjoyed it thoroughly. Thank you very much to all who've inputted and for the questions. It's been very good.
And so, I think
just finally say, I wish you all season's greetings. Have a great Christmas in as much as you can, and please keep safe.
Yeah, thank you, Tony. And I think the mood of the meeting is that the 20s are going to be the roaring 20s rather than the snoring 20s. So good luck, everyone. Stay safe. See you in 2021.
Thank you, Bruce.
Thanks very much.
Thank you now.